Welcome to More Money Friday, the podcast. If you're listening to us, thank you for listening. If you're tuning in live, thank you for tuning in. I am sorry about starting a little late. I had to get things ready. I want to make it sure it was beautiful for you guys because today's a special episode. We have my man Ejiro from Brooklyn Funding here again.
What's up, guys?
And today is the whiteboard edition. Last time we had a lot of questions about can you actually break down the numbers? Can you show us? So Edjo's going to do some scenarios. These are real scenarios. So please don't share these numbers with anyone else. Share the video. So let's go. Once again, Brooklyn Funding Group for all your hard money loans. You can message me, hit up Ejiro, let him know you found us from this YouTube video or listen to the podcast. We would appreciate that. So we know our marketing is working. All right, so down to the numbers. If you guys have any questions while we're doing this, feel free to ask them in the comment section, and we'll get to them as soon as we can.
How you doing, guys? So a lot of people ask questions. They come to me and they go, is this a deal? Does it make sense? What are my numbers? What are my rates? What are this? Numbers. Can I do it? Can I even flip? So we're going to get a scenario down. All right, I'm going to need your help.
Okay.
Mr. Marcel.
I'll do my best.
So, you want to purchase a house, right?
Yes, I do.
How much is the house? Let's call it on.
The house is $135,000.
$135K. How much rehab do you think you need?
$150,000.
Let's go. $150,000. That's a big project.
Yeah.
What's the ARV?
The ARV is going to be, I believe it's $350,000.
$350K. I think it might be worth a little more.
Okay.
Let's say 400.
400. I got bit. Mosquito caught me today. They're everywhere.
Now, what's your credit score?
675.
675. All right. How many flips have you done before?
Over about 7, 8, maybe 10.
Experience 7+. So now I ask all these questions. These are the quick questions that I ask, so I know where he is. I want to know the purchase price. I want to know how much work he's doing. I want to know what's the ARV. Then I asked his experience. He said 7+, so he's very experienced. Then I asked his credit score. Credit score really doesn't matter unless it's below 600.
Okay. Then
we can start thinking. So now I know I'll give him about 75% of this ARV value.
Why 75%?
Because I know that, we could even go up to 80% because you're very experienced. But 80% would just tell me how much I'm willing to lend on this project.
Okay.
So a quick analysis would be, I would take $400,000 times 80%, $320,000. So 320 is the most that I'll lend on this project. So since he has an experience level of 7, I'll give him 90% of the purchase price, which equals 135 times 90%. So that's 121,500.
Dang.
So I'll give him 121,500, which means that he only put down 13,000. So his down payment so far is 13,500.
Hustle Tribe, if you're watching this and you're confused, this property is in Connecticut. That's why the property is so cheap. This is a real property. We're giving you real scenarios. This isn't made up fairy tales. It's a property that we're actually working on, and Edjo's going to help me get funding for.
So now we're giving him 121, but he also said he needed rehab of $150,000. So 121 plus 150 equals 271 500. Is it below 320?
Yes, it is.
So this is a great, great deal that I'll fund for.
Okay.
Which also means that if he needed more than 150, there's room for him to,
Ask for a little bit more.
Exactly. Let's say the appraiser goes out and says 150 is not enough to fix this house. It's leaning. There's foundational issues. Then this number might go up to 175.
Okay. What if I didn't want to take the more money and instead wanted you to put the payments into it?
Well, depending on how of a relationship that we have, if I'm willing to put the payments into the loan, we can talk about that. This is private money. It's
doable.
It's all relationship building.
Do you hear that? That's why you have to keep going back. All the people who say, hey, I have one lender, but I go on another lender for this, that hurts you in the long run. You want to build one good relationship with someone who's like, yeah, Malcolm keeps coming back to me. He's keep doing deals. I know he's good for it. I know he's probably looking at 3 more, so he's going to give me more business. So they'll work with giving you better rates and lower prices because they know in the long run you're going to bring them more money.
So now let's get down to it. So now, since he has good credit, he is very experienced. His rate is only gonna be, let's call it 10%. That's 10% on the year. Points that I'll probably charge for him, since he's such a good person, would be 2 points. 2 points.
Because he likes me.
2 points only means 2% of the total loan amount, which is
not the purchase price, the loan amount, meaning what we actually are borrowing. So it's 2 points or 2% of that amount.
And that would be $5,430. Now, we're adding these up, but we're not done yet. There are closing costs. When you buy any house, there's closing costs. There's title searches, there's insurance, there's a lot of things that you do that. And we typically round closing costs to 5%. Most of the times it's lower, but that's a good number to keep in your mind if you're trying to generate what type of funds you need to bring to closing. So it's 5% of the purchase price.
So not the loan amount. Now we're going back to the purchase price up top.
So we're going to have 135 times 5%.
If you're now tuning in, we're doing live scenarios of how to get a hard money loan, how they break down, how they calculate it. So Hustle Tribe, this is what you need if you're going to start getting to flipping, long-term rentals, buy and holds. This is the key.
So now, if you add all of this up, you're going to have $6,750 plus $5,430 plus $13,500 equals $25,680. That's your estimated cash to close. So now you know, if you were to come to me and be like, Ejiro, I only have $15,000, I'm like, you actually need a little more than $25,000. And that's a realistic number.
Now, what makes this so special and so crazy is if you wanted to buy this house as an investment, doing a mortgage, you would need 25% down. So you would need 25% of the 135. And that's if it was rentable. Now, we actually only need 25,000 to close the whole property because it's not rentable. And we only borrow 10% of the property. Did you see that here? We only put down 10%. The rest of it is closing costs and points. Those are fees associated with it. So this way, depending on how you maximize your money, if you find a good property that needs work, you can actually come up saving a lot more versus going the traditional route. So you have to know how to weigh your options.
Also, the fact is that we also gave you 100% of the rehab. We gave you all the money you needed to flip this property, put it on the market, sell it. You sell this property, whatever you sell it for, the difference is what we take. Mm-hmm. The difference is what you take.
Well, we're not selling this one. This one's going to be a buy and hold.
Oh. So now they have two options. They can go to a traditional bank, mm-hmm. Chase, all these other companies, or they can come back to me and say, listen, we have a good relationship with you. I know your rates are slightly higher, but there's no income check. There's no W-2s. There's no tax returns. I need this closed quick. We make enough income. We make about $5K a month. Doesn't really matter. Slightly pay a little bit higher for the headache, and we'll close this in less than 30 days, especially if we got him into the loan the first time.
Yeah, you guys want to get us out.
We definitely want to get you out.
Now, question. With this deal, I do have 2 other partners.
Mhm.
So what information would I need to bring to get this done?
So it's very simple. There's a couple of things. Can we see all the way over here? I don't know if you can see. I know there's a little glare. All right. So we need corp documents.
Corp stands for corporation. If you didn't get that.
So it'd be your LLC or your C corp.
Mhm.
It'll be your
LLC.
So it'll be your filing receipt. It'll be your operating agreements. Now, he said he had 2 other partners. So in his operating agreement, it would show that they're equal partners, 33%.
Correct.
Or however you distinguish that. Then there will be your EIN number.
Mm-hmm.
Then there will be your tax ID number, which is the same thing as the EIN number. So that counts for your corp docs. What are the docs you need? Your IDs. We need to know you are who you are.
They want to make sure we're a real person and not James Bond.
Secondly, what we would need is your bank statements. Now, the reason why I asked for bank statements is because a lot of people may say,
your hair ain't got much needed, by the way.
thank you very much.
I don't know if it's because of the camera that you
I upgraded from chicken scratch. A lot of people would say that they have 25,000 and maybe they may have 21,000 and it may delay the closing. So sometimes it's nice to see what the bank statements are up front. We'd be like, okay, you have the money that you say you have. We can close this relatively quickly. And it allows us to know how we're going to move. Secondly, is going to be credit report.
From every borrower.
From everybody who's going to be the guarantor. Sometimes we have situations where there are partners on the corp who are not guarantors. Those are partners who are typically like less than 10%. And they might be like, I'm not really that much of a big partner. I don't want to be a guarantor. I just gave a little money. I'm 9%. Mm-hmm. You know? But credit reports. Now, what we're looking at for credit reports, we're not looking at your debt. We're not looking at how much houses you own, your ratio. All we're looking at is that you aren't in foreclosure. You haven't had a bankruptcy. You haven't had too many charge-offs. You know, just that your credit is around the 675 that he said. Then there's a background report. Background report.
What's that?
So basically, we're just looking at, that you're not a financial criminal.
Okay.
A lot of people, and that goes hand in hand, credit and background check. It's not that you don't have to be an angel, but if you're robbing banks, we want to know that you're robbing banks, especially since we're giving you money from bank.
That might make sense.
What's next from this? We need insurance, homeowners insurance, HOI, homeowners insurance.
Oh, that's a perfect segue into quick commercial. Welcome back to the More Money Friday podcast. Today's Friday, so we got to talk about making more money. I got my main man, Ejiro, my hard money lender, my good friend for a couple years now, and also co-founder of Brooklyn Funding Group. So if you need hard money loans, you know what to call.
Brooklyn Funding Group. So now we left off on corp docs, IDs, bank statements, credit report, background report, homeowners insurance. Now, homeowners insurance, it's very simple. You can go anywhere to get homeowners insurance, but it has to be a commercial policy because it's a corporation that we're lending to. Homeowners insurance just has to be the same amount. If the house is worth $400,000, you don't have to get a policy for $400,000. You just need a policy for what I'm lending to you.
He wants to make sure that he get his money back in case the house burned down.
That's all I want. I want my money back. If you choose to put a little bit more on it, that's on you.
Exactly.
So homeowners insurance. Then we need a title report.
And this is part of the closing cost, correct?
Part of closing costs, title report, and we need the appraisal. And that's it. Now, you don't come out of pocket for anything here except the appraisal. And that goes directly to the appraiser. We don't ask you any money. There's no application fee. There's no pre-approval $200 fee that a lot of these other lenders charge.
That is true.
We just out here in Brooklyn just giving it away if you qualify. So we don't scare people away by saying you're going to have to put down a deposit of $500 that go to your closing costs. I don't care about that. All you got to do is pay for your appraisal, especially if I vetted the deal by asking these 5 questions. Purchase price, rehab amount, what's the value of the house, what's your credit, what's your experience. Those are the questions that I need that help me evaluate whether or not this is a good deal.
So, am I getting funded?
I'm going to go with hell yeah.
Okay. So, we are looking to get this deal done. We did have a soft agreement. She said to give it about 2 weeks and then we'll get signed contracts. So when we do, we'll also document that so Ejiro can talk you through actual seeing the docs. I want you guys to feel like you're there with us as we're going through and getting this hard money loan, because a lot of people talk about flipping, they talk about buying holds, but they don't show you the behind the scenes of actually meeting the hard money lender, actually going through the breakdown and actually getting the credit report, getting the paper, the documents, the court docs, and having Ejiro go through everything to make sure that we can get it and get the funding, because it doesn't matter if you have money, it's how you can leverage it to get more properties and more deals done. Does that make sense?
Absolutely. It makes a lot of sense.
All right, Ejiro, what else?
So now we can do another scenario.
Okay, perfect.
Now, this scenario, we just did a purchase.
Oh, we can even do one about refining this.
Exactly.
How would it look getting me outside of this hard money loan? Because I need to buy and hold this.
So now we got him into it. Now we need to get him out of it.
So the reason you're probably thinking, why would you want to get out? A hard money loan is a short-term loan. Short-term goes for about 1 to 2 years, correct?
Yep.
That's short-term money. So you don't want to be in that forever because you have a timeline. So the faster you get out, the better for you. Now, most of them have a date that you have to. So say, for example, you get in a loan and you get out in 3 months. They usually still charge you for the full 6 months. But anytime after that is good. So if you get out in 7 months, you don't have to pay the whole year. You get out in 7 months. But it's normally from 0 to 6 months you have to pay. No matter if you get out in 2 weeks, 3 weeks, 1 month, 2 months, you still have to pay for that.
Except for me.
Ooh.
There's no prepayment penalty.
Oh.
If you get out,
I didn't even know that.
in 2 months, you're out.
Hustle Tribe, did you hear that? That is news to me because I've never met a hard money lender, well, until Ejiro, that actually did that. They usually they calculate the interest and they want that money because that's how they're calculating their growth, their money. So
now we've just gotten you in, and the payoff is now $271,500. That's the payoff. The value, the as is value is $400K. Now, before I used ARV, which is after repair value, but now it's repaired, so now it's just the as is value. It's just the value of the house.
because remember, last scenario we took the $150,000 that Ejiro gave us and put it into repairing the house.
So now we got the as is value. Now he's looking for a long-term loan. You're looking for a 30-year fix, right?
Correct.
No income check?
It doesn't matter. We all have good income.
But do you stated or not stated? Do you want to go to the bank or do you not want to go?
I want to see the difference because I know the bank sometimes gives better rates.
Mm-hmm.
So I want to see what you have to offer. But we're willing to show you our documents if it helps us get a lower rate.
So basically, I'm not in the business of taking people's documents.
Okay. So I'm gonna give you. Ejiro saying he doesn't want to look at my documents. This is what he's gonna give me. So Ejiro, do your thing. I'm not giving you nothing. I'm refusing to give you my documents, but I will show you the rental income.
Okay.
The rental income is we turn it. What the situation is, it's a 2-family house, and where it has enough room, the town already approved it that we could turn into a 3-family. So we're going to add on or cut. We're going to build it to make it a 3-family because it's way too many rooms as it is for a 2-family. So that's going to increase the value to the $400,000 that Ejiro said. Might actually get $450 if we're lucky. And then the rental income, I think each unit is going to bring us about, I want to say 18. 1,800 something.
1,800 each unit.
Yeah.
1,800 times 1,800 per unit, and that is 4.
Ejiro was pretty good with the
This is-
5,000.
this
You remember?
Yeah.
That's
This
pretty good.
is damn good property. Like, this is an investment. You looking for more partners? Okay, all right.
Actually, I told you we might, because remember, right next to it, we're trying to get the land from the church, and that's going to be a ground up.
I'm down with the ground ups. So now, since this is a cash out refi, I'm assuming you're looking for a cash out refi.
Yeah, I want my money back.
Okay. So
I gotta flip some more houses.
flip some more houses. So now I know you have good credit. I'll give you 75% on a cash out refi.
Okay.
Which equals to about 300K.
Ooh. Remember how much we put in, right? We put in 255, something like that.
You put in 227, 25,000. You're saying?
How much I put in?
You put 25,000 into it, and your payoff, money that you owe me, is 27,100. What you're
So
getting?
you're actually paying me, because if we do the math, I think I'm gonna leave with more money than I put in. So you're paying me to buy a real estate property. That's what you're telling me.
So your difference would be 271,500. That is about a difference of 28,500.
That's more than what we actually put in.
But
Closing costs.
The
dang devil. I was about to get he's about to give me extra money. Like, okay, what's up?
And closing costs is about, like I said again, 5%. It's cheaper. If it was New York, he'll do something called a SEMA and save on his transfer tax. But maybe Connecticut has something like that.
I don't
know. Maybe they do, maybe they don't. So that would be 5% and probably charge you another 2 points. Let's call it 3. So everything would be about $24,000. Subtract from that, net $4,000. So you flip the property, got 100% financing on the rehab. Want to refinance out of it? Payoff is $271,500. Doesn't have to bring any money to closing, and you walk away with $4,000.
So we didn't recoup all of it. Closing costs caught up to us, but we still made money, and now we have a rental income property. And we remember this was a no docs. We didn't show any kind of documents. We didn't have to wait 60 days like with a regular traditional mortgage. This is happening in 30 days or less. So It moves a lot quicker when you go onto the dark side of things.
The dark side, I like that. Dark side with one shed of light. But you can keep doing this over and over and over again. And sometimes his profit margin right here on the refi is bigger. You know, let's say he didn't need 150 and he only needed 125. This would be $25,000 more. So it'd be about $30,000 he'd be walking away with.
I'd be getting paid.
You'd be getting paid. So those are the scenarios. He just happens to have a heavy rehab. But a lot of the times he would be getting the $25,000 that he put in, plus an additional $15,000 to $40,000 on a refi for a property that he's keeping.
Mm-hmm.
He's keeping a property and making some money as if he flipped it. It's amazing.
And then you remember you're getting rental income for as long as you have tenants in it until you sell it. So you're still making money back from actually getting the mortgage on the property now, but you're also making money from the rental income. So as soon as I close, I'm making money on the property anyway. So when I close, just more money coming in.
So now the difference in documents that you need for this. Remember, the first time we needed court documents, we still need that. IDs, we still need that. Bank statements, credit report, background report, we had it already. We're not going to pull it again. Homeowners insurance just now goes up to $300,000 instead of the $271 because he's taking out $300,000. Title report, it's the same thing. Title is already going to be pulled. Appraisal would be a light appraisal since we did it before, just to confirm that it's still worth 400,000. That they did everything that they said that they did. Now, the only other thing that we're going to ask for is the leases. They rented it, 3 units. We just want to see the leases. And what we're going to ask for is the payoff. It so happens to be me, so I will just provide the payoff to myself. Like, this is what you owe me. But typically, if it wasn't me, I would request the payoff, and it will just tell me how much money they own the house. And that's all she wrote.
That was perfect.
Simple.
This is a deal that we're actually working on. That's what makes it so special. Edjo's telling me what I need for the deal that I'm working on. And you guys are just learning. So Hustle Tribe, you're learning how to flip and do buy and holds. A lot of people don't want you to learn this, but we do.
We're here from you.
Now, what would my rate be on this one?
So, now, let's talk. Well, has the highest credit score out of everybody?
The highest one's probably like 8 something. Some of my partners have really good credit.
800 plus. So we're looking at this. We're looking at 4.65. Right off the top of my head. You know, a commercial, like any kind of commercial loan that's in the business name, would probably have started around 3.5. So we're about a point above.
Mm-hmm.
No jumping through hoops. No looking at DTI. No asking what was a charge for 500 on your bank statements. Letter of explanation on that. It's a lot of things that we don't ask for.
So this is good because you have different options. You want to have different options to see where you want to play with. And this is how you end up learning about real estate, mortgages, stuff like this. Because when you start understanding hard money loans, it makes it easier to understand mortgages because it's around the same thing. It's just a little bit higher rates, some more points sometimes, and they get deals done that mortgages can't do. Because I'll tell you now, if you come to me with a property that I can't rent, we're not going to do it unless you're doing a 2 or 3K loan. And even then, you have strings and hoops to jump through, as you said.
Absolutely. Absolutely. So a lot of these loans, a lot of these hard money loans they're for investors. They're for investors that need to buy something quick. They're for investors that don't want to have to show all these documentation. Those are investors that don't care too much about the rate because they're making $5,400 in income, so they'll spend an extra $100 a month on the rate that they wouldn't have spent on a conventional or a traditional lender for the sake of their peace.
It's about peace and time. Why would I give myself more work? I'm already busy looking at more real estate, trying to buy more properties. Okay, you're going to charge me a little extra. It's fine. Just handle it and make sure it gets done quickly. That's it.
And then the problem when you keep going to the traditional bank, the bank might tell you, wait, you have enough houses. And that's when it comes down to it. They may not even believe that the next house you're going to have is going to have $6,000 worth of rent. They may be like, it doesn't really happen that way, but you have the vision.
Mm-hmm.
And typically, the investors and the developers and the flippers, we make the market. So they're going to be, saying no to us now, but then next year after our property goes up, they're going to be saying yes to somebody else based on your property.
Exactly.
Now, hard money lending does for purchases, like we did in the first scenario when they bought the CT property. Refis, when we got them out of the property. Ground ups.
Oh, that's what we got to talk about next.
Ground ups. That's building something new, construction. And multi-family / mixed use properties. Mixed use just means it has commercial and residential units in one.
Okay, now can we talk about ground up? This is a hypothetical scenario because we're still negotiating the prices, so I don't have the full prices, but I do know that we're looking at ground also right next door to the same property that we're buying. Does that make it better for the lender? Like, hey, we just bought this and we're buying the land next to it. Does that help us, or it doesn't really matter?
It doesn't really matter, but what it does do is what helps us is the relationship that you have with us. If I know that you're typically you pay your monthly interest on time, you flip your properties, everything goes well, then I'm more comfortable doing that. So basically, hard and fast rule for ground ups is we'll give you 50% of the land purchase. All right. If you have plans, we'll give you 60%.
Ooh. So make sure you get the plans first.
Plans. But not a lot of people want to. Not a lot of people want to take plans out on a property that they don't own. And certain people that usually do 60% with plans may have bought a property that already have approved plans. It's already due, or they may have bought it cash, and then come to me with plans and say, "Listen, give me 60% back, and I want 100% of the buildable."
Okay, so we have two options. We can either purchase the land ourselves and then come with you with the plans like, hey, we already own the land. We want 60% back. Or we can just come to you 50-50.
Absolutely. Absolutely. Right off the bat. I'll give you 100% of the buildable cost up to 75%.
You like the 75?
75%. That's a good number. Anything happens after 75%, there's still 25% worth of equity that we can rescue.
Rescue the deal.
We can rescue the deal. That's what that means. So this is pretty simple. We like to see typically that you have some sort of experience with new construction.
I have none. So I'm gonna lean on you. You're gonna have to be in the chair, and you're gonna have to join the partnership or something.
If I join the partnership, then I can help.
Okay, because none of us have experience. We've all done flips, but no one's done new construction. This will be the first time.
Now, there are certain things that count as new construction, even if you don't really have new construction. Like, I consider like a very heavy rehab. Like, if you did something worth, let's call it,
that's what the Connecticut one is.
200 to 250 in rehab. That's a great consideration.
Oh, I've never went that high.
That's a great consideration. The house is falling over. You added a floor. You dug the basement out. You pushed it back. It's not new construction, but it involves all of the permits, planning, and
So the Connecticut one might qualify for new construction.
It won't. It won't. It won't. You tried it.
We're gonna knock because we have to knock that thing down pretty much.
If you have to knock it down and it's really changing, and you take before and after pictures, then yeah, I might consider that.
Because it's a 2-family would turn into a 3, and we have to knock it down. It's like I need 150,000 rehab.
150,000 is a lot.
Yeah.
But typically new construction start at 250.
Okay, so we're not there yet.
Yeah. Okay. So I mean that's pretty much that. The other thing is multifamilies. A lot of people want to buy things that are turnkey. Some people don't want to do the fix and flip or the renovation. They just want to buy something that's already cash flowing.
Yes.
And we're able to do that.
You are?
I'm able to do that. So
I have one right now that we're looking at for another partner. I got different partners for different projects. So I'll pull out a real scenario so you guys don't think I'm bullshitting. I know, Ejiro, you gotta go. Ejiro's looking at his time like, Marcel, you told me, but see, I'm gonna go see it. I'm gonna go see them tomorrow. I want you to think I'm lying to you, Ejiro. Okay. Guys, I can't show you the properties, but they are right there. We're gonna go see 8 different properties.
They just froze it. Zoomed it.
All right, so I'm gonna give you one that I did like. I'm opening it up. All right, it's $450.
$450 purchase price?
Yes.
Purchase price.
It's was that a 3 or 4? I think it was a 3-family.
3-family?
And taxes about 8,000.
Tax 8,000. And where's this? Where's this located?
Connecticut.
CT. What is something like this friggin' rent?
About the same. It's all in the same area, so it gives you about the same 18. It's like 17, 18 in between there.
So 18 per unit. right?
Yep.
So same 5,400.
Mhm.
And this is a 3-family.
Correct.
Let's see. So we give 80% of
Okay.
his purchase price. So let's try that. That is 450%. So you have a loan amount of 360K, right? Let's say we keep everything the same. Your interest rate was, what did I say, 4.625.
625.
Loan amount is 360.
Hustle Tribe, thank you for watching us. This is a breakdown. We went through 4 different breakdowns. We went through purchase, refi, new construction, and now we're going through multifamily. How you can get a hard money for all of them with no real docs.
So now, taxes is $8,000. Loan amount is 36. Interest rate is about 4.625. Your monthly payment is about 26.49
Wow.
with me. Meanwhile, you're bringing in 5,400. So you are taking home a net profit.
Net means after all expenses and stuff like that.
Of,
So that payment includes my insurance, my taxes, and money to Ejiro.
I'm gonna just put it in green.
Because this is what you're making every month. This doesn't include property management, though, right? You didn't.
No property management.
So it'd be a little less with the property management.
Unless you manage it yourself.
That is true.
This will be your net profit in this
Every month.
every month.
Who can't use about $2,000 a month? If you can't, let me know because I'll take it for you.
Even if we take away 15% for expenses, minus 15%, you're still at almost $2,400. This is an amazing. Now we just did it off the purchase. He did no renovations in the property. He got a good deal. He looked at it, said, I have enough to put down 20% in this. I funded 360 of it. Taxes are 8K. Monthly mortgage is about 2,700. He's bringing in 5,400. Net profit is 2,751.
The 15 is for a case of repairs and what's the other one? Vacancy.
Mhm.
Now, my last question to you, Ejiro, because I know I'm supposed to only keep you to 9. What if I don't want to put down 20%? Is there anything we could do?
If you don't want to put down 20%,
Does it raise the interest rate or what do we?
no, 20% is the most that I'm going to give on a purchase. There are other things that people do, like they might leverage other properties, they may refi another property, and that's where the refi comes in. If you own something already, so they can bring here. Like for a client right now, they leveraged 3 of their properties that they had. They refied, the cash out refi, pulled out about $250,000 and bought 2 8-unit buildings in Connecticut. That's what it takes to make it how you can get it, or get it how you can get it.
And don't forget with this you still have closing costs also.
Mm-hmm.
So it's gonna be another 5%. So all in you're probably at 25%. Which isn't bad because all in a traditional mortgage it will be 30% because it's 25 down, 5%. So sometimes you paying the higher interest rate isn't a bad thing.
Yep.
So Ejiro, I will be giving you a call tomorrow if I find something I like.
Mm-hmm.
And Hustle Tribe, that's it. Ejiro, any advice? One last tip that you want to tell the people?
I want to tell them that make sure you look at all the fees before you sign on that line, because sometimes it's a deal up front. Then when you start looking at all the fees, the carry costs meaning how long it's going to take for you to finish the project. It's a very different between a 3-month project versus a 9-month project, and that will cut down your profit margin. So give me a call and I'll walk you through it.
Brooklyn Funding. This is the real Mr. Marcel. Thank you, Hustle Tribe. Thank you guys for watching. And you can always replay this or share it on YouTube, Facebook, and anywhere that I guess you have connection, right? Share it everywhere. Tell your friends about it. Tell a friend to tell a friend. Brooklyn Funding. We funded.